Welcome back to Grown Quality. My name is Elian, and what a confusing day. We had amazing CPI data, we had good jobless claims data, but still the markets fell. So why exactly was that? We will find out in this video, because in my opinion it isn't so much as to why did stocks sell off, it's about, well, what was rising today. That tells more of the story. So let's just dive straight into it. Because here, as you can see, we had good jobs data. We had initial jobless claims come in at 222,000, and continuous jobless claims also came in below expectations at, well, 1,852,000. Now, the other thing we had this morning was CPI data. And, well, the inflation rate at a month over month number actually went negative. It was minus 0.1% and 3% year over year. We had the core inflation rate for month over month at 0.1 and the core inflation year over year at 3.3. Everything was below what was expected. And this is very good because this is what Powell has been hinting towards in the last 2 days with his, well, hearings at the Congress. And basically, the jobless data is taking some worries away of a jobless recession. So this is all very good data, and we've seen a lot of stocks jump up because of it, but also a number of stocks sell down. So this is what the futures look like during the middle of the trading day. The S&P 500 was down 0.8%, while the Nasdaq was down 2%. The Russell 2000, on the other hand, was up 3.4%. So that's a big difference in what was happening. And, well, we could see it because if we look at this chart, this is the Nasdaq. And, well, as I already said, it's not about what went up or what went down today. It was about what went up. Because here we can see the Nasdaq, and from October 26th to July 10th, so that was yesterday, the Nasdaq was up 46%. Now, I don't know about you, but in about, 8-9 months, almost 50% gains in an ETF or in an index. I mean, that's quite amazing, isn't it? And the reason for it is actually quite simple. Because if we look at this picture right here, we can see the main components, the top 10 components of the Nasdaq. We see that Apple is number 1, Microsoft is number 2, and Nvidia is number 3. Now, this might all not be such a new information to you. However, it does explain a lot. Now, if we look at the S&P 500, which is down quite a bit today as well, at least at the time of filming, we can see that from October 27th, it bottomed a day after the Nasdaq, to July 10th, yesterday as well, it was up 37%. The S&P 500, which, well, on an average does 8% per year, is up 37% in 8 to 9 months. Now, the average, of course, is taken from both the good and the bad years, so it's an average, and there are the years where it's up over 20%, and there are years where it's basically flat. So, up 37% in 9 months, in and of itself, isn't as meaningful. However, we know that it has been quite concentrated. For the S&P 500 as well, as we can see, the top holding is Microsoft. It's the biggest company of the moment. But we also see Apple and Nvidia at around 7% of weighting. Now, Amazon is the 4th largest, and it's about half of the weighting. So we know that these indexes became quite top heavy. Nothing wrong with it. That's the way an index works and how they go up as much as they do. But it does explain a bit. Because if we look at today, again, at the time of making this video, I know that the stocks are currently, well, curving up crawling up back again a bit, but Microsoft was down 2.7%. Apple was down 2.6%, and Nvidia was down 5.6%. These stocks were down a lot, like a lot. And basically this comes as all these stocks that we have been mentioning have been running up an excessive amount, an extreme amount in the last year to 1.5 years. We can see it here for Microsoft, again for Apple, which most of the move came quite recent with the announcement of the new AI phones. But also Nvidia, it's up like 13% still from 1.5 years ago, from October, December of 2022. These are extreme moves, and this is what has been driving the indexes up as much as they have done. So we know that they are falling, but why are they falling? Well, in my opinion, the CPI print acknowledges the move towards a rate cut for the Fed. And having a rate cut for the Fed is what everybody has been waiting for, and especially small caps. Because we can see the IWM, so the Russell 2000, the IWM is the ETF of course, is up over 3% today. The small caps have been waiting for this, well, this relief, for this hope for better times for them. And what we are seeing today, in my opinion, comes down to, well, funds just rotating money. We know that, like I said, Nvidia has gone up a lot. We know that Microsoft has gone up a lot, and they have been testing their limits in terms of valuation. Their valuations are really up there, but where are valuations not up as much? That's the small cap, because, well, we just know for a fact that they are the ones that get hit the hardest with higher rates. The increased cost of capital hits them the hardest. And if the cost of capital is projected to come down, and we are not talking about what it may signal for the economy or whatever, just the fact that interest rates might be coming down, that's very good for small caps. So in my opinion, what we are seeing is just a simple rotation. Now in the coming days we will see if this continues and if this keeps developing. But for now, that's the interesting move. Now what else have we been seeing today? The jobless claims. And here I want to make a little note myself as well, because we were going towards that sum rule, and if this would mean that we would get a jobless recession, that basically the loss of jobs would create a recession in itself. And having this report that's below the expected number kind of takes the stinger out of it. It takes the edge off there. And that contributes to that higher, well, to the increases in the Russell 2000. But with that being said, just know that I don't think we are seeing some collapse in the markets here. There is no crash coming. What we are seeing is a rotations that was well overdone, and I think that maybe, it's not a guarantee. I thought PayPal wouldn't go under 60 again, and guess where it's trading. So, but maybe what we are just seeing is that funds were simply waiting for the opportunity to get into small caps, waiting to get out of names like Nvidia, the entire AI trade, Palantir, Micron, SMCI, and just waiting for an opportunity to say, okay, now we are going to attack elsewhere. We are happy where we are sitting, and now let's look further and rotate the market, get out of these names. The party is done there, just maybe. I think that maybe might be well reasoned, but let me know what you think in the comments below. And if you like this video, please remember to subscribe and like, and I hope to see you in my next video.